Good morning and welcome. You're watching Market Cafe on ET Now. Another fresh day of trade. I am Harsh Saita and with me is Ankita Saxena. Good morning, Ankita.
Good morning, Harsh.
Generally, Ankita takes us through all that's happening in global markets, so I will request her to do the same. Ankita, take it away.
Thank you, Harsh. Now, global markets are pretty wobbly. Yesterday also it ended in the red, and the US bond yields were skyrocketing yesterday. All the major averages finished lower as bond yields, of course, rocketed. The US 10-year Treasury note briefly topped 4% for the first time since November and was up 8 basis points at 3.9%. The yield on the 2-year Treasury note was last trading at 4.8% after rising more than 8 basis points. On the back of that, Nasdaq Composite led the losses, falling more than 0.5%. The S&P 500 dipped 0.4%. However, the Dow Jones Industrial Average added just 5 points, largely flat, ended the day in the green. It is also on track for its 5th consecutive negative week since May 2022. Now, investors are awaiting the jobless claims data that will be coming out today and the productivity data, very important numbers coming out from the US, so all eyes will be on that. The Fed Governor Christopher Waller is also going to give a speech as of today, so that's also something that we will be watching out for. So that was a roundup of the US markets. Now let's look at the European markets. Now, European markets closed lower after German inflation accelerated in February. Now, a German flash estimate put the inflation rate harmonized with the rest of the European Union at 9.3% in February, which would be an increase from the 9.2% in January. The Eurozone inflation figures are due on Thursday, so that's something that, which is today, of course, and that's something that we will be waiting and watching for. But the estimates for the German inflation was 9%, and it of course came in at 9.3%, which was higher than what was estimated. And on the back of that, the European markets fell. DAX was down 0.3%, down 60 points. FTSE was bucking the trend though, up 0.4%, was largely flat, but ended the day in the green. So that was a roundup of the US and the European markets. Well, inflation doesn't seem to be abating anytime soon. Harsh, where is the crude at?
Yeah, let me first take you to the dollar index, Ankita. So, of course, you covered the point where essentially the US 10-year yield has shot up. It's gone up to 4% from the 3.93, 3.94% mark. So it shot up around 7 to 8 bips. Ideally, even the dollar index should have strengthened, but that's not happened. It's largely flat on a day-on-day basis because we saw the dollar index fall a little bit, and when the yield shot up, it recovered to where it was yesterday. So clearly the dollar index is where it is. Why is this relevant? Because crude largely also is impacted by the manner in which the dollar moves, and at the moment crude couple of percent higher than where we left it yesterday. It's at around, if I take the absolute figure at the moment, we're looking at the WTI crude, which is just below $78 a barrel, and we're looking at Brent at $84.50 a barrel. So there's no meaningful gain that crude has made, but despite that, there is some amount of optimism in the crude market on the back of one. On the demand side, China reopening, so that's one thing that's keeping crude continuously elevated. And the second piece is the fact that US crude inventories are now topping out to May 21 levels. So we are seeing US inventories at around that 480 million barrels, which is quite large, and every week the US is literally doubling down on that inventory count. So that will keep a lid on the prices with regard to crude. So a couple of those moving parts, keep an eye out on. The other piece, of course, is Russia. Russia may reduce its production of crude. So keep an eye out on that as well. March is going to be a very interesting month.
Clearly, March is going to be an interesting month, but let's quickly look at all the interesting events that will take place today. Of course, I mentioned the US initial jobless claims data that's likely to come out today. We also have the Eurozone CPI numbers and the ECB Fed February meet minutes that will be coming out today. Very important numbers, data points coming out today, and we will be keeping an eye out for that. Back home, we have, of course, the Daiichi Singh IHH Fortis Healthcare case hearing that will happen today. We also have today is the bonus issue date and the stock split date for 361 WAM. And for Jagran Prakashan, it is the buyback offer. It's the buyback offer that will be opening today. Also, we have been closely tracking NASSCOM, but today is the last day for NASSCOM Tech Forum.
Right, let's quickly move straight to what's happening in the global arena. US Secretary of State Antony Blinken said that he has no plans to meet either the foreign ministers of Russia or of China. During his last trip, Blinken met with counterparts from all 5 Central Asian countries that used to be ruled from Moscow. He will be in New Delhi to attend a group of 20, which is the G20, along with his Russian and Chinese counterparts.
And President Joe Biden spoke at the House of Democrats conference as he tries to set the tone for the party ahead of the 2024 elections. The speech comes a little over a week before the White House is scheduled to present Biden's fiscal 2024 budget. Now, he warned against plans to curb healthcare access.
Well, yes, Elon Musk sought to rally Tesla Inc. shareholders around his vision for achieving the electric vehicle maker's long-term goal of accelerating a transition to sustainable energy. The Tesla chief executive and other Tesla managers made their pitch at an investor event. Tesla suggested that realizing its vision for an energy transition could require some $7 trillion of investment in electric vehicle manufacturing.
And Salesforce shares soared 16% in extended trading after the cloud software beat the Wall Street estimates on profit and issued a better than expected forecast. The Salesforce revenues grew 14% year over year in the fiscal fourth quarter, which ended on January 31st. The Salesforce laid out an operating margin goal of 25% for fiscal 2026.
And ELI Lilly announced a series of price cuts that would lower the price of the most commonly used forms of its insulin 70%. The company said it will automatically cap out-of-pocket insulin costs at $35 for people who have private insurance and use participating pharmacies. President Joe Biden called the announcement a big deal. He also urged other pharmaceutical companies to cut insulin prices.
And Alphabet Inc.'s self-driving technology unit Waymo laid off 137 employees in the second round of job cuts this year. Waymo has eliminated some engineering roles as a part of the cuts to focus on commercial success. The job cuts at Waymo are part of wider layoffs across the auto and tech industry.
Well, India is set to host the G20 foreign ministers meeting in New Delhi under its presidency today. The G20 foreign ministers meet in New Delhi is one of the largest gathering of foreign ministers hosted by any G20 presidency. While the credit goes to India for its diplomatic relations, there seems to be one large issue that even India is finding hard to tackle: the Russia-Ukraine war. The war has divided and taken center stage at the G20, an economic forum that represents 85% of the world's economy. We spoke to the experts about other topics that would be on the meeting. Listen in.
Let's give some credit to the foreign ministry under Dr. Jaishankar for having got even the warring sides all together in New Delhi, which the West, despite its clout, has not been able to achieve as yet, to have them all in the same room. Now, there are conflicts other than the Ukrainian conflict. There is one possibility brewing on the Taiwan front. There is the Sino-Indian thing, and you have the Chinese foreign minister making his first visit to India now.
I think they will push their positions as hard as they can, and they're pretty ruthless when they do this. Not just the West, but equally Russia and China. So India is in a sense spot in between, trying to play peacemaker, trying to negotiate a draft, a final communique. So it'll be a tough job for us.
And in any way, the foreign ministers meeting actually is the precursor to the summit, how it's going to happen and how it's going to play out. because whatever the outcomes here, all kinds of challenges, all kinds of discussions on international and global issues are held, which are impacting on. And today, the biggest impact after the pandemic is that of the Russia-Ukraine war, and I think that is going to be discussed.
Well, with that, it's time for a quick breather. You don't go anywhere. There's lots more news coming up on the domestic front.
Welcome back. You're watching Market Cafe on ET Now. Let's quickly move on to domestic news. Airtel wants to increase your monthly cell phone expenses by at least 50%, and its chairman Sunil Bharti Mittal hopes that prices will increase this year. Mittal says that no one is complaining because salaries have increased, rent has gone up, but cell phone users are not shelling out money. Now, Airtel's average revenue per user, or ARPU, is about $190, and its target is to take it to $300. However, will it be wise on Airtel's part to raise prices, especially when Jio's revenue per user is already way below Airtel's? And now, will a price hike affect India's dream of taking digital services to the poorest of Indians? We'll discuss that, but first let's listen in to what Minister Ashwini Vaishnaw told my colleague Sameer Dikshit.
During the G20 conference here, one of the events here, Mr. Bill Gates was very kind. He talked about India's public digital infrastructure, the digital India that Honorable Prime Minister Shri Narendra Modi ji has created, and he also endorsed India's speed at which India's 5G is being rolled out, and he said that India's 4G, 5G network is among the best in the world and lowest cost in the world, and that has really helped inclusive growth in the country.
It's Reliance Jio that has changed India's telecom landscape by bringing prices down. Now, average revenue per GB is at about, for telecom operators, about 10.5 to 12.5 rupees. But more importantly, what it's done is that Indians are using more than 15 GB per user per month. Now, if they want tiered users, let them bring it, and let's see how competition plays out. Will Vodafone, will Vi and Airtel survive if they go to 300 rupees ARPU and Jio keeps prices low? Many consumers will switch. If they're willing to take that risk, let them take that risk. I think it's an open market. We have so much data because there's competition.
How much elasticity there is in this market, we will know only after people attempt to raise prices in a significant manner. I do not believe that the elasticity is so high. Indian consumers are known to be very, very price sensitive. So I'm sure the operators will tread carefully when they attempt to raise prices very, very steeply. But having said that, I do believe that the next few months will see prices rising, and the operators will test the waters to see how far they can take it.
How much TRAI believes it has to step in is yet to be seen. So just to lay the scene, TRAI does have extensive powers to, for instance, control pricing structures and the kinds of plans that are offered by these companies. And so far, TRAI, at least when it comes to different kinds of pricing models, such as tiered-based pricing or pay-as-you-go pricing, it hasn't made any comment about them, and those seem fine. So it does seem likely to me that we will see Vodafone and Airtel going in for such pricing mechanisms. But whether they can still control any of the market share, given mobile number portability, given the ease of shifting between one telecom provider and another, is yet to be seen.
And moving on, the government has written to SEBI reinforcing its opposition to the Hindustan Zinc Limited Board's move to buy Vedanta's global zinc business in a $2.9 billion cash deal. Now, the Mines Ministry wrote to SEBI last month Now, currently, Hindustan Zinc is a unit of Vedanta, and according to SEBI regulations, related party deals require the approval of minority shareholders by a majority, and the government retains a 29.54% stake in Hindustan Zinc Limited. Now, the government, which had privatized Hindustan Zinc over 2 decades ago, has already warned the company of legal action if it moves ahead with the plan.
Well, yes, and a year after the announcement, Axis Bank has completed the acquisition of the retail business of Citibank today. Remember, this deal was done for a whopping 12,325 crore, which now has come down to 11,600 crore. Ankur Mishra spoke to Axis Bank management about this deal. Here's an excerpt.
When you announced the deal, the total consideration was 12,325 crore. Now it is 11,600 crore. Total 625 crore to lesser, if we say it precisely. So, what has been the reason of this number change? If you can explain first.
Yeah, I think the reduction is about 700 odd crores. See, when we had announced the deal, we had mentioned this, that in terms of making sure that the value preservation happens, because the moment you announce a transaction of this kind, there is expected to be some amount of customer attrition. And we were very clear that we should make sure that both parties are aligned in terms of running the business and protecting the customers as much as possible in terms of the franchise. There are 2-3 things that happened between then and now, right? One is we went through an express consent process, which is the right thing to do. We went and asked customers and we sought their consent to move. So there was some amount of attrition because some of the customers didn't want to consent. So that happened. There has also been, like Amitabh mentioned, our original base of the deposits was on June 2021. If you remember June 2021, that was the second wave of pandemic, wave 2 of the COVID. We had some of the highest deposit bases at that point in time across the banking sector, largely because the spending was not there.
And well, with that, it's time for us to slip into a short break, but we'll quickly take you through the stellar lineup that we have on the market. At 9:20, we have Sanjeev Prasad, MD and CEO, Head Kotak Institutional Securities, on his view of the market. At 9:35, we have Hemant Sikka of M&M on the February auto sales numbers. Then at 9:45, we have Prakash Gagdani of 5paisa.com and Amisha Vora of Prabhudas Leeladhar on the retail interest that's waning. At 9:20, we have Rakesh Khanna of Orient Electric on finding the growth for the company. And at 10:30, we have Praveen Iyer of Aksa Air on the growth taking off for the company.
Welcome back. You're watching Market Cafe on ET Now. It's that time of the show where we take you through all the individual stocks that will be in focus in trade today. So let's bring in Lisa and Vamakshi, who are going to help us with that. Lisa, talk to us. Good morning, firstly. Talk to us about all the stocks that are going to be in news.
Well, good morning, Harsh and everyone. So it looks like the rail stocks will be in focus today on the back of Vande Bharat tendering for 200 trains. So starting with the RITES JB, on the back of its JB, it has contract value of around 14,400 crore for 120 trains. Bharat Electronics also has won around 9,600 for 80 trains in consortium with Titagarh Wagons. RBNL has received order for train sets worth rupees 24,000 crore. It's important to note that this contract value does not involve the operations and maintenance. Moving on to HAL, the government has cleared procurement of around 70 basic trainer aircraft worth rupees 6,828 crore, and that will positively impact FY25 earnings going forward, and it's estimated that it will increase by 3%. The total order book is expected to be around 9,000 crore by Q4 FY23, and Nuvama has reported that the company may be included in the MSCI May 2023 as a contender. If the share price holds about 2,650, inflows could be around $140 million. Moving on to Axis Bank, Axis and Citi, they had a con call. So Axis has stated that the market share has been increased to 16.2% from 11.4%, and the Citibank credit card business has grown after the acquisition announcement. However, the Q4 FY23 P&L that can be impacted with goodwill, one-time policy harmonization charges, as well as the transaction charges. On delivery, SoftBank has sold around 3.8% stake worth rupees 940 crore, and currently it's at 14% of the company. And lastly, on KNR Construction, it has received HAM project in Andhra Pradesh for rupees 665 crore. So these are the stocks that will be on investors' radar for today.
All right, thank you so much for that, Lisa. Now, Vamakshi, you have all the brokerage notes coming this morning, but first up, Suntec Realty has struck a lease deal with Upgrad. You have all the details. Take us through what the details are and then tell us what the brokerage notes say.
Well, absolutely. So Suntec Realty will be definitely in focus today, and after the company has actually signed an exclusive lease deal with Upgrad, like you rightly pointed out. They have leased out nearly 2 lakh square feet of this premium commercial building, that is Suntec BKC 51, and this is coming in for a lease term of nearly 29 years. Now, Upgrad is expected to start paying starting rentals at nearly rupees 300 per square feet per month on a carpet area basis. The project, in fact, is expected to generate a turnover of nearly 2,000 crores over the lease tenure. This project is definitely near completion, and the possession is likely to go ahead by June 2023. Now, what Nuvama believes that Suntec has 55% area in this commercial project, and this in turn would lead to annual rentals of nearly 24 crores. The project, in their opinion, has a potential enterprise value of nearly 250 crores, which is 10% higher than what they were expecting. And this is against an all-inclusive cost of 110 to 120 crores, makes it a very value accretive deal. Now, Suntec Icon, on the other hand, which is another leasing project on the cards, it has 0.2 million square feet of built-up area near BKC, and this project is also nearing completion. And on the back of that, they're actually expecting the company to again complete leasing over there. So on the back of all these news flows, these 2 commercial projects, Nuvama believes will provide a steady annuity stream to Suntec Realty, and that could lead to boost in cash flows. They're liking the diversified presence in the MMR region that the company has, as well as its robust execution capability. They're also expecting a higher sales trajectory. So overall, a lot of positives working in for Suntec Realty, which is why Nuvama has maintained a buy rating with a target price of 483 per share.
Well, yes, a 60% upside to current market prices for Suntec Realty by Nuvama. But let's quickly move on. Vamakshi, you also have the brokerages, and you've been going through all the brokerage notes. So talk to us about the key ones that you've been reading up on.
Well, absolutely. First of all, the cement sector will be in focus. We actually have a note that has come in from Citi, and what they're saying that the prices have been hiked, and this, in their opinion, may not be sustainable as the industry focuses on volumes in March. Now, Shree Cement's valuations, in their opinion, suggest that a fair bit of optimism around the industry is already priced in. Shree Cement stocks, in their opinion, will underperform Ultratech Cement on the back of cement price disappointment going forward. So, on the back of all this, Citi has initiated a pair trade, recommended an overweight rating on Ultratech Cement and underweight on Shree Cement. We will also be watching out for some oil refiners in trade today. Anand Rathi has come out with a note, and what they're saying is that with the fall in product spreads for diesel and ATF, they're expecting a further cut in the windfall taxes, and if reduced, this shall be positive for standalone refiners such as CPCL as well as MRPL. ONGC and Oil India, on the other hand, continue to make $75 to $77 per barrel of neutralization. Apart from that, we also have Avenue Supermarts on our radar. We have a note that has come in from Goldman Sachs, and what they're highlighting is that quick commerce is becoming a mainstream competition to Avenue Supermarts. They believe that Avenue's e-commerce business is unlikely to be a large contributor, and e-commerce is actually cannibalizing their store sales, and it is coming in at a lower margin, so which is why they maintain a sell rating, target price of 3,400 per share. And lastly, we will be watching out for LTTS. We have a note that has come in from Nomura. Broad-based ER&D service providers have gained market share versus pure play pure play players, in their opinion. They are the challenging macro environment is expected to weigh on discretionary ER&D spreads. The valuations for this counter are also appearing to be quite rich, which is why Nomura has initiated coverage on this stock with a reduced rating, target price of 3,050 per share.
Well, thank you so much for that, Vamakshi. We will keep an eye out on L&T Tech and Avenue Supermart for sure. Now, moving on, government has approved the procurement of 70 basic trainer aircrafts from Hindustan Aeronautics for a whopping 6,828 crores. Now, brokerage firm Nuvama sees this as a positive impact on earnings and believes HAL as a key contender in the MSCI May inclusion. My colleague Somit joins in with all the details. Over to you, Somit.
Well, if you see, the Cabinet Committee of Security, that is CCS, has cleared the procurement of 70 basic trainer aircraft worth nearly 6,800 crore rupees from HAL. Now, of the 70, 40 are expected to be delivered over the next 6 years. And the company had earlier indicated in the third quarter FY23 conference call that they are expecting around 55,000 crore rupees of fresh order over the next 6 to 12 months. And this order or this deal is expected to be a part of the order that they're expecting of around 55,000 crore rupees. Now, other orders that are in pipeline includes a light utility helicopter, a repeat order of light combat helicopter, and the Sukhoi upgrade. Now, this order win will help the company maintain its double-digit revenue growth from FY25 onwards also. Now, this order may positively impact the company's revenue and earnings estimate for FY25 by around 3%, and this is as per Nuvama Broking. And they're saying that it won't impact the FY23 and FY24 estimates because the deliveries are expected to start from FY25 till FY30. Now, post this order win, the total order booking expected to be around 90,000 crore rupees for the company, and this is after adjusting for the fourth quarter FY23 revenues. Now, apart from this, brokerages are also indicating that Hindustan Aeronautics as a stock could get included in the next MSCI review, that is in May 2023, and they're saying that the stock will most likely get included if the share prices continue to stay above the 2,650 rupees per share mark. And they're saying that if the stock is included, there could be inflows to the tune of close to $140 million, that is nearly 4.6 million shares for Hindustan Aeronautics. Apart from this, the company will also be considering its second interim dividend on March 10th, and given the strong cash flows, brokerages are expecting a good dividend announcement coming in from HL, so keep an eye out for this stock.
Right, thanks so much, Samit, for that lowdown. But let's quickly move on. Bajaj Finserv has been granted permission to start mutual fund business, and Sharad is with us to take us through what impact that will have for the company. Sharad, talk to us.
Well, that's a big player coming in the mutual fund industry. That means the listed AMCs will be under pressure. That's what analysts are stating. But now let's get back into the details. The company has received the SEBI license to start their mutual fund business. And of course, this will be the 43rd company coming in the mutual fund industry space as well. But now let's know who's the CEO. Ganesh Mohan, he would be the part of Bajaj Finserv already. He's in the corporate strategy team, and he's the group head. And the person who will be managing the money, the CIO, he is actually the ex-head of investments and equities at Canara Robeco AMC. His name is Nimesh Chandan. So apart from the management, the commentary is also coming strong from the company. They have stated that they'll expect retail and institutional clients in the mutual fund space, and they'll be providing a full product suite going ahead in the financial space. But what lies the impact for their AMC players, especially the listed ones? Of course, do remember there'll be a greater competition. Pressure would be there on the yields, and lastly, there might be a loss of market share, especially in the equity segment, as a strong distribution network and digital capabilities have been there for Bajaj Finserv. Now, which are the largest AMCs in India? That is something which is interesting. And of course, SBI Mutual Fund hits the list, and it's at almost 8.65 lakh crore rupees for the month of December, and followed by ICICI Pru Mutual Fund and HDFC Mutual Fund. But what makes the Indian mutual fund industry unique? It's the rising AUM, and amid the market volatility, still the numbers are very strong. And it's going currently almost at 41 lakh crores for the month of January itself.
All right, thank you for that lowdown, Sharad. We'll quickly move on now. Diagnostics major Metropolis held its management meet where it said that they see increased competition in the brick and mortar segment, but they will not indulge in price wars. My colleague Winnie joins in with the key takeaways of this management meet. Take it away, Winnie.
So absolutely, in terms of the management main takeaways, let's talk about the competitive intensity. Management highlights that the competitive intensity is slightly abating but has increased in the brick and mortar space and is likely to persist for the next few years. So competition maybe could continue for some time for Metropolis, including they're not actually indulging much in terms of price war. They're focusing on specialized tests as well as premium wellness. The company also highlights that they're going to be putting more thrust on the D2C side, mainly to acquire more customers there, resulting in increased market spending. Other than that, they're likely to effect a price hike as well, especially in its specialized test business, and they're confident of delivering a mid-teen core business growth and protecting the EBITDA growth as well. Now, what the management believes that they will consistent quality, aggressive expansion, focus on tier 2, tier 3 cities, and investment in Hitachi, high-tech and D2C businesses space could actually lead to the growth for the company, drive the growth for the company, and maybe come back to the pre-COVID level growth for Metropolis as well. On the back of this, we're seeing Credit Suisse has come out with a note. They're maintaining an underperform rating, given a target price of 1,250 rupees per share. They say that the market is quite competitive, but the nature of competition is actually changing. And what they also highlight that the EBITDA margin could be challenged with the expansion of the network as well. So keep an eye out on Metropolis.
Right, thanks so much for that, Vinny. But with that, we're completely out of time on this edition of Market Cafe. Of course, stay tuned. We have the market in front of us, and thanks so much for watching.